Thank you, everyone, for joining our panel on insurance. I was going to have everyone do intros, but it sounds like we don't need to do that. But to start, I think, insurance oftentimes can be viewed as a little bit of a black box. I know when I first started buying insurance for NIDIG, I had no idea what was going on and had to rely on a lot of external resources for help. I think just to set the stage, it would be helpful to hear from both of you terminology that might be used throughout this conversation, what brokers do, what underwriters do, carriers, how everything kind of works together as folks in the audience might consider buying insurance.
Thank you, Charlotte, and thank you for everyone for listening. I think just a level set in terms of the insurance buying process, us, Patrick and myself as brokers, we work as an intermediary between our clients that operate within the digital asset ecosystem and our carrier partners, such as Charlotte here with Proof. And what we really do is we analyze the risks, and we act as a partner risk management for arm of theirs at the end of the day to really understand the space, understand their risks, and then understand and educate our carrier partners in the space to drive capacity. So that's ultimately at the end of the day, and a good broker in the space is going to understand the digital asset ecosystem, understand the clients that operate within that ecosystem, and be able to effectively risk transfer for them away from their balance sheet that they don't want to face, risks out there. So that's at the end of the day what a broker does in this space.
Yeah, I think Ben nailed it. I think and one thing I'd add is, our job as a broker is twofold. It's one, to kind of sell our clients or convince clients or prospects of why we're the right broker. And I think industry knowledge is really important. And then two is to work with our carrier partners like Charlotte and Proof of, hey, this is why it's a really good risk. And so I think it goes into understanding your business, your space, and also identifying carriers who will underwrite the risk of why it is a good risk and that they understand it too.
Thank you for explaining that. So I think on that note, a big theme or important part of having a partner that understands the space, helps you evaluate risk, get a better pricing, get products that actually make sense. To that end, I think a lot has changed in the industry, both on, the crypto side, but also in the insurance space over the last year. You both spoke on this panel last year, and I'm sure you've seen a lot change since what you spoke about last year. Can you talk about just the evolution of the industry, both on, what you're getting asked from clients, but also on the carrier side, insurance side as well?
Yeah, I think to start, I feel like anytime we speak on a panel, we're saying, hey, there's still a lot of growth available within the insurance markets and insurance capacity. And insurance capacity is just a fancy word, a way of saying insurance limit. And so I think now that, the digital asset space is becoming more mature, I think with the new administration in the White House, that has really helped over the last 6 to 10 months of insurance carriers becoming more comfortable with the risk. And then I think too, anytime with insurance, and other verticals, whether it be construction or real estate, hospitality, there's hundreds and hundreds of years of actuarial data that carriers are using to underwrite risk. And so, let's just take Bitcoin mining, for example. Really at a high scale, what is there, 5 to 7 years of data maybe? And unfortunately, we never want to see our clients have losses. But sometimes losses can be good from an underwriting standpoint of understanding why did a loss happen, what was the probable maximum loss in that situation, and from there carriers can underwrite it more. And so I think more carriers are kind of dipping their toe in the water, which is a good thing. And insurance is traditionally a very archaic industry, right? Like there are some brokers who'll still use paper applications, and then you take the digital asset space, and that is not a space that moves slowly. It moves very quickly, and so you're kind of trying to marry the two and make it work. But again, I think we're moving in the right direction, which is a positive trend.
Yeah, and I would just add to highlight Patrick's first point is, insurance what insurance carriers like at the end of the day is a bit of certainty. So coupled with the losses that, they've been able to obviously see now, another year, their loss experience is the regulatory framework. So, the Genius Act's helped. We're seeing a lot more, private equity money come back in the space. We're seeing just a lot more of clients from, that might have had U.S. exposure that have left are now coming back into space. So I just think the education gap and the, framework that is going on within the U.S. government has lended itself to more carrier capacity, which again is good thing at the end of the day for our clients, because we want the best coverage at the best price, and we try and marry those two as best we can.
Yeah, those are all great points. I think everyone knows that a hot topic in the industry right now are digital asset treasury companies. A lot of these companies historically had not operated in the crypto digital asset space at all, and now are either deciding to do it overnight or are not used to some of the insurance products or insurance processes that are involved with purchasing digital assets. Can you speak a bit about just digital asset treasury company insurance needs in general, how those conversations have gone, what sorts of insurance products they're buying or should buy?
Yeah, no, a very, very good point. I think, both IMA and Locked Up have seen a number of digital asset treasury companies come to fruition in the last, 6 to 8 months, definitely more even in the last 3 months. So it really is, something that I think the carriers are trying to wrap their arms around, because it depends on the structure that could be, that they are taking. Is it a reverse merger? Have they identified a microcap company that has not been involved in the digital asset ecosystem, and they're putting a $500 million pipe into it, and then they're going to start holding Ethereum or Bitcoin? So really, on the brokerage side, it's trying to educate the client of, okay, you were, one company this day, and then after transaction, you're doing something completely different. Your balance sheet's going to look different. What are the risks that come with that? New board members are coming on. What did the old D&O policy look like? Does that trigger the change of control in your current policy? So really looking at D&O. And then another thing is, looking at how are you going to custody those digital assets. So are you going to self-custody? Are you going to use a qualified custodian? If you're going to use a qualified custodian, what does the custody insurance look like? If you're going to use a self-custody, what does your risk framework around that look like? And how can you effectively insure that using crime or specie insurance? So those are really the conversations you're having in the day with the clients. And those are probably the biggest products that we're talking to at Locked In right now.
So at the end of the day, it's it's my job, it's Ben's job to convince the underwriters of why it's a good risk, as I kind of mentioned earlier. So I guess, Charlotte, a question I would ask you, being an underwriter, like what are kind of the traits that you're looking for when you're underwriting a deal for a digital asset treasury company? What are red flags that you see from your chair?
Sure. The moderator becomes the panelist. So I think from my seat, what is super important, especially for the public companies, is having really clear and robust risk disclosures. Especially, I'm primarily a D&O underwriter, so directors and officers insurance. There's quite a bit of securities-focused claims for public companies, so that's essentially what you're insuring against. You want to make sure investors are aware of the risks that they're taking on when they are essentially pivoting business models in a lot of ways. And so just being very clear in any sort of disclosures, you'd be surprised when I read through some. It's like, we're putting Bitcoin on the balance sheet. Okay, what is Bitcoin? What is it, a volatile asset? What could happen if price goes down? Just things like that is super important. I think not just focusing on the upside, but also being very, very clear on the downside is extremely important. I know that sounds negative, but I am a risk underwriter, so that's all we're really focused on. I think that's the most important part, just being very clear in your strategy and thinking about what investors should be thinking about effectively.
And I think one unique thing, too, is when a lot of these treasury companies started, it was only Bitcoin, and now you see a lot of companies transitioning into different types of crypto. And I think one thing that we've noticed is underwriters are typically going to favor Bitcoin over other assets. And so, if you do venture into, looking at a treasury company with an altcoin, or we've kind of seen it all, that can be difficult. I mean, you may be able to get some capacity, but it'll be very, very expensive relative if you're just more traditional Bitcoin route.
And I would just add, too, it really one of the things that we're talking about at IMA and Locked In is, the strategy behind, the DATCO, if you will. Is it a true hedge? Or are you going to also infuse financial services that are going to help, how we paint to an underwriter of, hey, this isn't just going to be a Bitcoin or Ethereum hedge. Like, they're going to have, actual real services here that are going to help generate revenue. They're going to have a business model. What does the team look like? What have they done in the industry? As Patrick said in the beginning, we really need to paint a strong picture because the market is seeing a number of these digital asset treasury companies. And, we as brokers need to make sure that our clients are not just lumped into, hey, this is just another, DATCO that, is stemming overnight. They've taken the proper steps. They've made the proper disclosures. They have a business strategy behind this and how they're going to custody things. So I do think at the end of the day, true, it's, you want to make sure your clients are ready for those questions that underwriters are going to ask them.
One last point I'll make too on that is a lot of traditional carriers are starting to dabble in the space, which I think is great. Just from a capacity perspective, brings prices down for clients. What I do hope happens though, or I hope does not happen, is that there's one bad risk that scares the traditional markets. They pull out and then they didn't understand the risk, or the underwriter didn't think about certain potential outcomes, and all of a sudden there's no capacity. And so I think it's important from the carrier side to be very thoughtful throughout the underwriting process and make sure that capacity is always available for clients in the space.
And I think, being in the insurance industry, we have so many acronyms and there's a lot of insurance speak. And I think when Charlotte's talking about traditional insurance carriers, I mean, just think of carriers that you would see advertised Sunday during a football game: Liberty Mutual, Chubb, Hartford, Travelers. On the D&O side, like AXXL is one of the biggest insurance carriers in the world. They advertise on for a soccer team in the EU. So those carriers, I think it's a very bullish sign that they're starting to dabble in the space, to Charlotte's point, because I think it speaks a lot to where we're moving as an industry where, 4 or 5 years ago it was very limited, it was very expensive, and it put companies in a really tough spot because they had to buy it, but it was oftentimes one of their biggest line items on their P&L.
And I think it is a credit to carriers that were in this space early, such as Proof, because they really sort of set the stage for traditional carriers to understand, okay, markets are underwriting this, they're understanding the risks, and they're understanding how the claims work. And one of the biggest things we talked about our clients is looking at carriers and how long they've been in the space, and have they paid claims, and do they understand that the process of when a claim happens and your business as a whole. And I do think that's one of the things that Proof itself has stood out for, is that they set at the stage of we're a digital asset insurance carrier, and we are here for the ecosystem, and they've been here. So you have credit to, not to just tout Proof this whole time, but credit to Proof for being able, sort of leading that charge.
Yeah. Thank you. I know we've talked a lot about digital asset treasury companies. There's a lot of mining companies in the room and at this conference. A lot of mining companies that are also contemplating or already moving into the AI data center space. Can you speak to some of the differences in insurance needs for those types of companies, things they should consider as well as the space evolves? And I guess the second part to that question is, do you see a difference between AI pricing for insurance versus Bitcoin mining?
So, at IMA, one of our biggest verticals kind of within our digital asset space is Bitcoin mining. And, if you look at traditionally in the past, if you were a traditional data center, the cost of your insurance program versus a Bitcoin miner would have been, a fourth or a third of what a Bitcoin mining company was paying. And so, in our mind, we called it a crypto tax, that, those miners were being unfairly priced, because our argument was, hey, they're very similar risks at the end of the day. And a lot of it is new construction. There's a lot of thought that goes into it at the end of the day. And I think fast forward to now, where you see a lot of miners that are transitioning to AI HPC. So it's kind of just further proving our point that we made 3 or 4 years ago. And I think as far as mining companies getting in the space, there are some differences that we're seeing from a coverage standpoint. Whether it's SLA insurance with a hyperscaler that they may be doing a deal with, but at the end of the day, it's it's more of a capacity issue, because some of these limits that we're seeing, or some of these facilities that were being built, are, multi-billion-dollar facilities, especially when you start including the GPUs. And so it's really just, again, educating the carriers on, hey, here's all the risk engineering that's gone into the facility. This is a loss control that's been done, the engineering behind it to make them comfortable with the risk, which in turn will, bring back kind of a robust program. And as Ben mentioned, good program for the best price.
I would actually pose, not again to keep posing questions to you, Charlotte, but one of the things that we're seeing is as people do this, and it's something we're talking to markets about, is Bitcoin mining, and the big thing about Bitcoin mining was the revenue stream and the fluctuation of Bitcoin, where AI HPC, it's more contract driven, so it's a more set stream of income that you can then underwrite to. You sort of know it. You can look at the contract. Okay, they have this, from your seat, and obviously Proof is a large player in the Bitcoin mining space. But have you found underwriting to be a little bit more fair as people are shifting to AI HPC?
Yeah, it's an interesting question. I think on the property side, the lower rates for AI HPC facilities are warranted, just given the amount of investment in the actual infrastructure build that goes into an AI HPC site versus the average Bitcoin mining site. Not to say all Bitcoin mining sites are created equal, but you don't have that same uptime requirement as you do for an AI data center. And so, when traditional property underwriters would go into a Bitcoin mining site and say, like, there's no sprinklers, why? Stuff like that, I think, like, rates, keep building and building because the more that they see. And so I do think that there's kind of an interesting dynamic there. The data center property space is not new necessarily, so I think it's easier to underwrite, to your point earlier about seeing actuarial data and loss data and all that sort of thing. I think on maybe the cyber side, it's a little bit different for those that are buying cyber and tech E&O insurance. But yeah, I agree that a lot of the times we'll look at companies that have great management teams, have great balance sheets, are operating really great facilities, and just because they're mining Bitcoin, they are dinged for that. To your point on consistent revenue, though, from maybe a business interruption insurance perspective, that's a lot easier to underwrite, right? So your site goes down, you have X amount of contractual revenue, you're going to be paid that no matter what. It's a lot easier to adjust a claim in that scenario than like, oh, some days I curtail, sometimes I don't, and the Bitcoin price is like, there's just so many more variables. And so for a traditional claims handler to see that and be like, whoa, I'm not used to that, they'll just either price it super high to accommodate the uncertainty and make up for the risk, or they just won't write it at all. And most of the time they just won't write it at all.
Well,
go ahead, Patrick.
I was just going to say, and I know when we're talking about, Bitcoin mining companies transitioning to AI HPC from a property standpoint, but I also think from a D&O standpoint, for a lot of these companies that are publicly traded, you look at companies like Iron, TeraWulf, who've seen their stock go from $3 to $40 or $4 to $20. That's obviously great, but from an insurance standpoint, there's volatility there, right? So, if a company comes out and says, hey, we have this pipeline of power in the queue, or we think there's a contract upcoming, and there's investors that feel that they got misled during that process, it also opens up a new can of worms from a D&O standpoint. So I think with the volatility in that industry, especially as we've seen from stock prices, D&O insurance is also going to continue to be very important within that space.
Yeah, that's a really good point. When you asked earlier about the digital asset treasury companies, I think the same goes for the miners and the AI HPC folks too, where you put out any sort of press release and your stock will jump, but investors are going to be upset if that doesn't actually come to fruition, and that's when securities claims come into play. And so just being very careful and tight with language, even though it's fun to put out press release, being careful. So as a D&O underwriter, there's claims. I know that you guys speak to a lot of different folks in the industry across different sectors of the industry. Is there a most common coverage that people are requesting, or commonly asked questions, or even common misconceptions about insurance that you feel come up a lot?
Yeah, I think the common coverage that you've probably seen the most evolution is on the crime side. I think there's just more capacity. There's more of an understanding. I think if you look at what you're custodying and the true nature of the exposure there, a lot of that is going to be on the crime side. So it's going to be like loss of assets, and that's what everyone's concerned about is loss of assets. And it used to be you could build large custody towers through Lloyd's, which was a great thing to have, but really more cold storage insurance. And now people are understanding. I think it's just more education in the space, and so as people become more educated and look at really, okay, what are my true exposures here? A lot of that is more lending on the crime, the traditional crime insurance side. So I think a lot of the conversations that we're having locked in are more on that crime front, and we've seen a lot of evolution in that space and a lot more capacity come into that space.
And I would say, we've talked a lot about it, but I think directors and officers D&O coverage is, again, really important. Whether you're, a private company, public company, and if you're on the private side, I think it's important no matter where you're at in your evolution of kind of your company, because most likely you are taking on capital from outside investors. And so, that coverage not only helps protect you, the rest of the C-suite, the board, but also helps protect your personal assets, I think, in the event that something happens. So, I think D&O coverage is important for any company. And then I think from a misconception standpoint, I think this is just insurance in general, right? Like we all buy insurance because we have to. Auto insurance, homeowners insurance, and everyone says, hey, I pay all this money and it doesn't cover anything when I need it, right? And so unfortunately, sometimes that can be true with the caveat of, the person that you're buying insurance from or you're having consult on insurance, again, whether it's your homeowner's insurance, business insurance, D&O insurance, you just have to make sure that person is kind of an industry expert. And, sometimes you can get by in other verticals like hospitality or real estate because the insurance forms are more kind of not regulated, but, just very boilerplated, where everything in this industry is so unique and so manuscripted. So it's really important to work with someone, whether it's IMA, whether it's locked in, another kind of industry expert within this space. So in the event that you do need your insurance, that the claim is going to get paid, or you have a good understanding of what your policy does cover and doesn't cover, so you can help mitigate the risk in other ways, whether contractually, in setting up things at your site.
Looks like we have a question from the audience. Are we allowed to take it? Yeah. The question was about lobbying state governments in order to provide insurance in the industry. In order to provide the policies.
It's a great question. I think a lot of, listen, there's been a lot of change in the regulatory framework, whether it be federally or state, such as Texas right now. I think what we do is we try to work with the policyholders, the policymakers as best we can, because insurance should be part of that equation. If you, being able to be underwritten through and have a D&O underwriter look at your policy and say, all right, you have passed our approval. It is a very strenuous process. They're looking at your financials. They're looking at your board makeup. So to be able to say, hey, I went to market. I got D&O insurance. I got crime insurance. I have just proper risk management is key. And I think, the more policymakers infuse that into the overall framework of what they're trying to build, as obviously digital assets continue to evolve, insurance absolutely belongs and deserves a seat at that table. And we are seeing a lot more policymakers start to ask about it. And a lot of states are taking on the treasury, operations, and they're trying to understand, okay, how do we then insure this? So I think, in the last 2 years, we've seen a lot more insight and questions into what the insurance process is like.
I know we can talk after, and I'm glad that there's a lot of engagement, but we are getting kicked off the stage.
No one ever thought insurance would have to
really appreciate it.